Been watching the dollar carefully. Let's start there. Phil Streible is joining us. He's a chief market strategist at Blue Line Capital. Phil, good to see you. Good to have you back here on the TD Ameritrade Network. Let's start by talking the greenback here. A lot of people look at today's drop and they say we're back into the trend. The dollar decline that started in March is back on. What do you say?
Yeah, it did push down through 93.30. That was kind of a key level of support going up on its upward trends. Now, there was a lot of volume that came into the market, and that's what broke that market down. Volume that wasn't there over the last week. Remember, China was on holiday all week long.
So the yen had a pretty nice day, the Chinese yuan relative to the dollar. I know that's one of the stories here in the background. Of course, the fiscal spend too. You know, does fiscal spend, Phil, have enough dollar negative power as monetary spend?
You know, I got to think that when this haul goes through, when they come up with this agreement, they finally put something through, that I believe that it will be an initial capitulation point. Well, so we might see, going back to the dollar, that press that new low, and then the covering starts, short covering starts coming in. Same thing with like Nasdaq and everything else. I think that's when it pokes its high, and we start to break from there.
So you're saying you're not convinced yet that the March to August trends are necessarily back on, right? Because that's kind of the way we can break it down. March to August, it was dollar down, stocks up, and then August, dollar stopped going down, then gold stopped going up, and then Nasdaq stopped going up.
Yeah, it's wild. So, I mean, we haven't made higher highs in a lot of different markets.
Right.
That's the problem. Like, you know, everyone's rushing into a lot of these different commodities and a lot of different indices, a lot of individual stocks. You look at like something like Apple, for instance, it's well below its all-time high. You know, a lot of these stocks are below it, and that's why I'm not fully sold that this is any kind of bull recovery. I actually think that we're fighting right now between two different sections in the market, whether we're going into a stagflation or a deflation. Stagflation is what's going to thrust this market back up because of that rising inflation. But if the dollar actually catches a bid near this support, you're going to see all these commodities come back off again.
Do you think dollar support is going to also imply stocks in trouble again? That's what it's been. I know one could make the case. I mean, 2019, dollar was going up and stocks were going up just fine. We were the best house on the block. Economy was good. So it's not out of the realm of possibility that that relationship could flip. But where do you stand on that right now? If the dollar does get support and strengthen up, is that bad stocks?
Yeah, if you look at the stocks versus the U.S. dollar versus the S&P 500, there's a strong inverse correlation, as there is with a lot of different other asset classes as well. What I really believe, and if you look at the tape all day long, you watch it, the Nasdaq, and this has been over the last couple of days, the Nasdaq has been stalling. Some of these tech stocks, they come out with their earnings, their forward guidance can't possibly match this. I mean, how many Pelotons, how much can they be selling of these things, right? Eventually, there will be a plateau on everything. Those stocks tend to correct, and then people think they're going to front run the tape, and they start buying value. They start going into the Russell, into this infrastructure spending, things like that. A lot of those companies are not very good. How are you going to go out and just start buying cruise lines and hotels and restaurants? They're not coming back online. They will have no earnings, no growth, at least through the fourth quarter.
So, Phil, it sounds to me, you don't have to read too far in between the lines here, that maybe you're not outright bearish now, but you're waiting for a reason to get bearish.
Look, I stand close to the door. If there's a fire, I'm going to be the first guy out the door. Okay, so you have to have like a properly hedged portfolio. You know, I mean, if you're going to short like a stock indice, you got to stick with the Russell. The Russell has low volatility. The Russell is barely broken out to the upside. It's a bit overextended on its range. You know, you don't want to come in and short like technology because of the fact that that's the one that will take your face off. The S&P 500 is too broad-based. The Dow Jones, yeah, it's got a little bit of liking with the infrastructure. A lot of it has to do with which president gets elected. They both have big you know, difference in their policies. So, you know, there's a lot of plays out there. You've got to be ready to stick and move at any point right now.
Okay, Phil, good stuff. I like it. An interesting take there on the Russell as the weak one to go to if you want to get short the stocks. Beware of the face-ripping Nasdaq. Phil, we got more in that conversation to probe, but we got to run, staying next to the door in case there's a fire. But you invite the fireball in because I see that snowboard behind you back there. I like it, Phil. I appreciate you joining us. Thanks a lot, Phil Streible.